Aloha everyone, Joshua Hayes at BigWaveTrading.com. I hope everyone had a fantastic Thanksgiving with friends and family. Always a little weird on Maui because the stock market opens up at 4:30 in the morning. Most activities obviously don't finish till around 10 p.m. here. And I decided to have a slightly good time. Ate a lot of food, had a couple of beers. Everyone said I wouldn't make it today, but bam, I was there in the pre-market around all day, and good thing I was, as there was action out there. But still, that being said, not as much action as I would have thought have for a holiday short session, but that's mainly because of the overall market. As you can see here, the S&P 500 fell 0.67% today, and you can see the SPY is actually closing at a new low of the entire downtrend. So it's not at a new intraday low, but that closing price right there is lower than any of the previous closes. So the spider's downtrend is pretty much in effect and clear as can be. The Dow Jones Industrial Average, the diamond, did the same thing. That's the lowest close in its entire decline. The QQQ managed to close, I believe, 159.21, slightly higher from Tuesday's session, but still that downtrend is in clear in effect. The IWM did a little bit better, only down 0.09%, and the Russell 2000 actually closed up, I believe, 0.03% the last time I checked E-Trade. But overall, pretty poor session intraday, not that much to get excited about. But with that being said, the biotech stocks, as you can see, the index was up 0.40% today, actually did pretty good. There's a catalyst list that I have where I track the stocks in it. And as you can see today, these are the catalyst stocks. ONCS, I'm going to beat myself up over all weekend. This was, ask anybody, any platinum member that was around in the chat room whenever I was giving out these catalyst trade ideas on Wednesday. This was priority one. But what I wanted to see happen was ONCS gap down, open around anywhere from 80 to 85, then go through 85. Instead, it opened about where it closed. Took it off my radar because I was watching a few other stocks in the morning, TIS and EARS, and ONCS blasted up 11% today. But I have another one that I'm going to post to platinum members, and it'll actually be scrolling through this list. So if you're a regular member, and the only reason why I can't give it out to everybody just yet is because I do not have an official track record where I've taken these enough, where I'm confident enough that I feel like I want to put people at this kind of risk in these stocks, because these are catalyst events. If you do not sell before the catalyst, this can happen right here, the ONCS gap down. But ONCS has other catalysts. The gap down and offering is out of the way, and now it's curling higher. You can see here that volume was higher on Wednesday than the session before, and that's why it was on the top of my radar list. But once again, just going through these stocks, you can see ONCS, OCUL had a good day, VLRX had a good day, Blue had a good day, AFMD had a good day, GBT, AKRX, ADMA, IMGN, and the few stocks down. CBIO was still holding up. ACHN reversal, but still looks good overall. The pullbacks on lower volume, and BLCM is still holding its recent lows. So there are ideas out there, and to see these work today was great. I also gave a list to everybody of stocks to watch for breakouts over the day's high. I'm just looking for 5-10% gains because these things just don't hold. And OMED is proof positive. MPVD still kind of working. AKBA, you can see that one worked. Kirk's worked today. INWK did not, but is still holding up. RYB, ETTX worked today. So the main thing about everything that worked today, biotech. MPVD, as you can see, wasn't biotech. OMED was biotech. Kirk's, AKBO, ETTX was biotech, and ONCS was biotech. So I do have a catalyst trade. Come Monday, I'm going to put 10% of my E-Trade day trading account into it. I'll have tight stop parameters. I'll post that as a speculative new long position on the website this weekend, and I'll go over in detail in the chat room come Monday morning. So there are opportunities out there. Now, what took my focus away today was EARS. Let's go to a 1 minute chart here. It gapped up huge after hours. It's made a huge move Wednesday. Next year, Wednesday after the close, I know what to do. Buy anything that starts to run off positive news. EARS did it and TIS did it. but unfortunately TIS never set up. It did set up around the 160 area, move back up to 190, but this, you can see how much below the VWAP it was, so it wasn't the ideal play, but besides that, it just died off all day. Ears traded down through its VWAP and came right back through, but you can see it all did it in one candle. So unless you have a buy stop here with a limit order, you're probably not going to get filled, and or you're chasing on the subsequent pullback, never hit the VWAP, and then after that it was just done for the day. The only one that keeps on working that's still on radar, because there's an algorithm out there that keeps accumulating this stock at key support levels. Today it was Annie, and it did it all day around the 540, 550 level, and as you can see, it moved from 550 to about 620. That's good for a 10% gain, and as it went on later in the day, it still was able to move up almost 20%. But Annie's kind of a later day, later overall chart pattern. You can see that it's already had a big move following that big reversal bar. How much more can you expect? So Annie, kind of not the ideal trade situation, so probably should have just focused on ONCS. But first off, before I go through the rest of the stocks really quick, I want to also show you, these were the intraday trades today. You can see DGAS filled at 296. I still have my initial stop, but today's low day is now where 50% of my stop is. That's around like 265 or something like that. So half of my trailing stops is now at 265. The final one is at 229. HSII hit me with a profit stop. FRO was a small sell stop, and MET is a fail for a small sell stop. But that was it. Just 3 sells, 1 long, and there are 0 end-of-day sell signals, which now leads me to the last thing to go over. We got the biotech catalyst out of the way. Nope, I have 1 new long position. Cannot forget about that. And actually, let me go over that first so I do not forget about that as we then head into what I want to discuss next. ENSG. Now, I told everybody just recently, following all the Thursday fall signals, if the stock is not perfect speculator quality, I'm not taking it. ENSG is not only perfect speculator quality, it's can slim quality. Has I think a 97 composite rating if I remember right, 82 EPS rating if I remember right, and a 97 relative strength rating, like an A+ accumulation distribution. The group move is B. Sales profit margin I think is C only, but I can't remember. It's somewhere like around that. But I said if it's not perfect speculator quality, I'm not taking it. ENSG is perfect speculator quality and CANSIM quality. Said if it's not extended from its 20-day moving average, if it's extended, I'm not taking it. It is not extended, so I'm taking it. But I also said if volume is not above average or lower, I will not take the trade. Well, with ENSG, I figure biotech and medical stocks did really well today in a weak market. It's right there. It's CANSIM PS quality. I think I can go ahead and forgive this right here to go ahead and take 2% of my account capital at a long position at 44.76 with this candle over candle bar, especially with that first cut loss being right there at 43.31. And that could be your only one. So that's it. You can go long at 44.76 to anywhere from 44.76 to 43.32. And if it hits 43.31, you're out. Another idea is to set a good to cancel buy stop order at 44.76 and 44.77 as your limit order and only get it on the move up. And then also, so that'll be my first stop level, but even if you use as a final stop level, you're only risking 2% on the trade. And if I'm looking at a potential measured move of just even this move to this move, we're looking at a 15% move. So that's going to be right around a 7-to-1 reward risk ratio at the most lowest measured move level. I got to take this trade. So I'm going to go in at 44.76 limit. 43.31, I'm out half, and then my final stop loss is right there, 42. So if it hits 41.99, I'll be out of the entire position. And just like DGAZ, I think DGAZ was supposed to be like right around 1,000 shares, but after adjusting it to make sure I didn't lose more than $200 on the trade, it only ended up being 300 shares. So once again, I'll do the same thing with ENSG. If 2% is too much and I'm going to lose more than $200 by using this stop level, I'll reduce the size. But ENSG, new long position, pretty good setup. Have that Catalyst Biotech trade that I'll post on Sunday or Saturday and Monday in the chat room also, and a couple of members already know what it is. But really, nobody was around today. Where were you guys? Hungover? I don't blame you. So the last thing I want to go over is this scan. You see the S&P 500 stocks. I'm looking at average volume the past 50 days over 10 million. I know that says 1 million, but I changed it to 10 million so the options are liquid enough. So with that being said, there's only 46 stocks that qualify. Going into today, the stocks that I had flagged as the positions that I wanted to take were WMB. It gapped down, presented no entry, but you can see that that worked. S-Bucks, gap down, no entry, but you can see that it worked. MRK is still holding up. This one is still good to go. A short position can be taken here, risking this high right here as your first cut loss level. And then if you want to really be bold and try to give it time to work, you can then use this high right here. I'm going to go in the options change, look at it. I'm going to relook at the daily chart and see if I still want to do it. But MRK is still good. And Qualcomm is still good for this overall setup. You can see that it's kind of topped out here. It's rolling back over. The 13 has moved back below the 30. So I figure, you know, this has got good reward risk ratio once again. You can use this high as your first cut loss level, second one, and then the third one right here. I wouldn't give it back to here, but I mean, you could. You always could. But Qualcomm is a pretty good setup. But in this scan right here with everybody, I'll just go through it really quick with everybody, what I'm looking for. So ExxonMobil, 2 extended. There's no setup there. No setup there with WMB now. No setup with WFC now. And this is WMB was also another one that I flagged, but it wasn't as much. Verizon, 2 extended. Twitter, that's pretty good, but still I would rather it be from a previous uptrend that, or at least, you know, it had some kind of sideways movement before the rollover. But you can see Twitter pretty much worked today as the 1330 crossed over and it rolled over. So that's a, you know, that could work. T's 2 extended. SLBK, Starbucks, RF is not set up. Qualcomm is still in that sweet spot. 2 extended, 2 extended, 2 extended. PCG is very interesting to me. Yeah, it's 2 extended though, but if it can rally, I'm very interested in going short that stock. Oracle, 2 extended. You're starting to get the picture, so I'm just going to try to hurry through here so I can get this video wrapped up. We're at the 12-minute mark. I don't want to keep you guys around too much longer for the weekend. But everything here that I'm going through is 2 extended. This one's on the upside, but the chart's a little sloppy. General Motors was, I actually considered it as a short sale. So you can see here, if it doesn't work out, you got to cut your loss as soon as it moves above that high right here. So I consider GM on Wednesday evening as a potential one, but the gap down, you know, has clearly failed. General Electric, 2 extended. Fox A trying to set up. FCX, 2 extended. Facebook, 2 extended. eBay, no go, no good. None of those are good. CTL, Cisco, 2 extended, 2 extended, 2 extended. AMAT, not set up right. Well, that was AMD, excuse me. AMAT, not, yeah, it's okay, but it needs to go sideways more and then roll over, and Apple's 2 extended. So that's the gist of that. I'm looking for a fresh rollover breakdown with the 1330 crossing. It looks like Qualcomm is one of the best setups. So I go in and I look at the options change, look at the puts that are at least 1 month minimum out because it's a swing trade. When I day trade the SPY, I'm just looking for not the most closest option to expiration, but the one that's 2-3 days out, the weeklies. But for these swing trades, it's more longer term. So I just wanted to show everybody, since it's the weekend and you have time, and I'm not going to write a lot on the new positions page, what I'm looking for at these setups. But I'm now looking for stocks that have over 10 million shares average daily volume, as those are the ones that are liquid enough on the option change. Remember, I showed you Hulks and USM, was it? I can't remember. I think it was. But when I checked the option change, the bid ask were wide as can be, and the volume is just, you can't do it. You can't trade them. So I figured 10 million shares is good enough. I'll start going in there and see what happens. But right now it looks like just QCOM as a potential trade idea for Monday. All right, everyone. Have a great rest of your weekend, and I will see you in the chat room Monday morning. Aloha.